The Swiss franc continues embarking on yet another climb this week after previously finding support at the 0.95 zone, as depicted on the one-day time frame shown. This is the third time since April that this has happened this year, each prior occurrence connecting with the 1.0 resistance zone, followed by price action reversal. The odds of it testing the 1.0 resistance zone yet again seem reasonable, especially when considering how most institutional traders are currently shorting the Swiss franc according to last week's COT data. What then makes the Swiss franc enticing to buy? The European worldwide economic crisis that has unfolded over the past decade and a half have cemented the Swiss franc status as a safe haven currency. This is due to many factors, including Switzerland's remarkable economic conditions that we'll discuss shortly, robust trade relations with the European Union, and a promising currency valuation in contrast to the debt crisis that have plagued various other European countries, according to Forbes. The buying pressure resulting from the Swiss franc safe haven reputation is so present that it has proven itself to be a pervasive thorn in the side of the Swiss National Bank. The Swiss economy claims certain particularly coveted features that set it apart from many other developed counterparts. While the country benefits from economic highlights such as stable GDP growth, an impressive 2% unemployment rate, and mild to modest inflation, in part due to monetary stimulus, the nuances of Switzerland's economic performance are far more unique than the data alone reflects. In our content, you may have noticed that we occasionally use our own proprietary software to research the markets. This market scanner is called the A1 Edge Finder, and it is a tool our team has spent a lot of time designing and updating. The scanner imports data on things like retail positions to see what retail traders are buying or selling. It also imports bank and hedge fund positioning so that we can get an inside look at what the big players are up to. Of course, we pay attention to fundamentals, so we program the tool to grab economic data in real time to help keep us up to date. If you'd like a copy of the tool yourself, we're doing a major subscriber discount when you use code A1YT at checkout. In the description below, you'll find a link to get access to the tool. By purchasing our software, you'll be supporting our research videos here, as well as getting access to an amazing tool. Again, use code A1YT down below. Now, back to the video. For one, Switzerland's economy boasts a medium income and GDP per capita among the highest in the world, boosted by substantial trade surpluses due to plentiful exports to the European Union, its primary trading partner. On top of this, other factors that set it apart include a huge services sector, an unusually high-skilled labor force, a powerful pharmaceutical industry, which accounts for a large chunk of exports, and agricultural protectionism. While Switzerland's reliance on European, particularly German, demand can be perceived as a liability, especially nowadays as Russian tensions and hyperinflation in the Eurozone could potentially curb demand for Swiss products, it nonetheless remains a powerful long-term perk. The European Union's economy remains powerful even facing threats of stagflation, and the European Central Bank has recently proven cautiously open to rate hikes. Also, annual inflation in the Eurozone is currently more than twice as hot as in Switzerland, and wages for European workers aren't static, leaving some breathing room for the Swiss franc to continue rising against the euro without negative trade consequences. A recent variable that has thus far created more Swiss franc bullishness is the Swiss National Bank's shocking decision in June to implement a surprise 50 basis point interest rate hike to combat Swiss inflation. While the Swiss National Bank's target interest rate remains below zero at negative 0.25%, this was nonetheless an unexpected pivot from years of expansionary precedent. That Switzerland's 3.4% year-over-year inflation would prompt a contradictory response that aggressively is certainly bullish for the Swiss franc, since it attests to a distinctively hawkish change of tone from the Swiss National Bank. Another crucial abandonment of precedent from the Swiss National Bank is a recent departure from its years-long strategic devaluation of the Swiss franc against other currencies. As previously mentioned, the Swiss National Bank has regularly weakened the Swiss franc via foreign exchange markets, selling the Swiss franc to purchase other currencies such as euro in order to optimize export affordability for Switzerland's trade partners. This standard appears to have changed within the past several weeks, as many analysts are interpreting the Swiss National Bank to have abandoned this mode of Swiss franc intervention altogether in favor of tackling inflation concerns, allowing buying pressure for the Swiss franc to potentially advance unchecked. This is shockingly bullish for the Swiss franc, and may have long-term bearishness implications for the euro as well. While Swiss franc bulls have much to be enthused about in terms of fundamentals, shorting USD CHF could be interpreted as playing with fire. Both represented safe haven currencies, and the Swiss franc has no history as the world's reserve currency. Rather, minor pairs may prove to be far safer bets for conservative traders. For example, shorting the euro-franc pair has potential due to the Swiss National Bank no longer providing artificial support for the pair, which has just plummeted to its lowest level since 2015. The Swiss franc-yen pair is likely at the highest level since 2015. While Japan is comparable to Switzerland in terms of being a flourishing export economy with low unemployment, ultra-loose monetary policy, and a safe haven reputation for the yen, the Bank of Japan has not revealed a firm pivot towards hawkishness just yet, which is bullish for the CHF-JPY pair. Now to summarize. The Swiss franc has experienced an oscillating technical performance against the US dollar over the past few months, as well as a currently unsavory institutional sentiment with a 74.36% shorting Swiss franc. The Swiss franc has a renowned reputation as a safe haven asset, which is a historically meaningful label considering its unique relationship with the euro, relative price stability, and meticulous monetary policy coupled with foreign exchange rate interference. Switzerland has a uniquely strong economy for today's global conditions, including 2% unemployment and a growing GDP. Despite the Swiss National Bank's efforts, moderate inflation is accelerating, hitting 3.4% year over year. These rising interest rates, unusual for Switzerland, recently prompted for the Swiss National Bank to issue a surprise 50 basis point interest rate hike for the first time in years, signaling newfound hawkishness. The Swiss National Bank has habitually intervened in Swiss franc's value in foreign exchange markets for years, strategically depreciating its value for trade reasons. However, this precedent has recently at least slowed, if not been abandoned altogether. While it is difficult to say how much of the Swiss franc's bullish thunder could be stolen by an ever stronger US dollar, there may be bearish momentum for the Euro CHF and the bullish momentum for the CHF JPY left in store.
Interested in seeing our trades live as they happen? By joining the A1 Trading Discord, you'll get a notification every time one of our traders enters a position. Each trade we share comes with an entry price, a stop loss, and most importantly, a full breakdown of why the trade was taken. Learn alongside our experienced traders, join our active chat room, and ask your questions in our coaching webinars. Between our team of active traders, we trade Forex pairs, commodities like gold and oil, crypto, and stocks. By joining the group, you'll be able to keep up with all of it. Sign up today using the link in the description, and don't forget to use our promo code listed below for a special subscriber discount. Thanks for watching, and see you inside.